Good evening and welcome to our second week of doing these weekly videos. Sorry. They seem to have gone down very well, so no reason why we will not continue to do them. Okay, we're looking here at the S&P weekly chart. Now, as we know, on Friday we closed high. We closed at 21.29. We closed near enough at the all-time high. Our all-time high is at 21.34, and that's from 2015. And we've been to a high of 21.31. So, you know, we are at critical levels at the moment. What we're seeing, there is a case to answer for selling the all-time high or buying the all-time high. I think those two schools of thought, there is some merit to both of them. If you're a short-term trader and you buy a blip of the all-time high, what you're trying to do is you're trying to get hold of those guys that are selling and selling in size. You're trying to really push out the stops. And on stops, it might be great for a very short-term trader. It might go up to 21.40, absolutely fine. They're rubbing their hands with glee. I think the longer-term trader is going to sell, and they're going to hold unless we break above 21.50. And there are a couple of reasons for doing that. You can see that we start this week off around here. So if we do break higher, there isn't really anything much to hold us till 21.72, and the measure target, which will be 21.75. Now obviously from here we would expect a little bit of backing and filling. But if we do manage to break this 21.75 area, now obviously I don't expect that to happen this week, but you know, stranger things have happened. But if you do, look where we can go to. Okay, just under that 3,000 area. Now these top formations, they're quite significant, especially when you've got something like the all-time high looming at you. So I think the safest course would be to sell. Sorry about the dog. The safest course would be to sell if we open at these higher levels, because you know the daily charts are looking a little bit overcooked. But be ready to flip the trade if we can break above 21.40. We do that, up we go to 21.50. And I think that's when you'll see more sustained buying coming into the market for, as I said, this move up towards here. First 21.72 to 21.75, and then 22.93. So let's have a look at it on daily chart. You can see when the market made really good break higher. This was absolutely peachy. We had the support coming in at 20.75. We hit 20.74, and then we just went to the moon and back. Brilliant. I mean, really good, concise, ordered markets I found on the last week. They really were. And they didn't really wrong foot you at any stage. So, you know, I'm hoping everybody else got on board with that. I'm sure you did, because those of you that were with me, I know we did. But look at this down here. You know, you're getting a little bit overbought. We're nowhere near extreme high levels. We've just blipped above the 80%. We're still not showing a move to the downside. So we've got everything to play for in the next, well, tonight and then tomorrow and the US session. So we'll see what they do. Are they going to push it down? And if they do, from the all-time high, where can they push it down to? Look, we've got this line coming in here. Now this coincides with our support in the 21.05 area. So this is what we will be doing. We pull back from the 21.31, 34 resistance. We should come to here. And this is where you're going to see buyers coming back in. If we do dip a little bit lower, this is where they're going to come in again. So you've got between 21.05 and 20.94. And it really is only if we go below 20.88 that I think there's going to be a problem. But I think we're going for a really good trading week, and I hope we have a good session again this week. Thanks. Bye.